The Earned Income Tax Credit could give low to middle income workers a financial boost after a difficult 2020. A lot of people don't take advantage of this tax credit, and the IRS recognized that and issued a tax tip reminding taxpayers how to claim this credit. It could be a big help to a lot of families. The average credit amount in 2019 was actually almost $2,500. This credit would either reduce the amount you owe on your taxes. If you don't owe anything, it could provide you a refund, even if you're not required to file a tax return. But it all starts with filing a federal tax return. That's your only opportunity to claim this credit. Then the taxpayer is going to qualify based on your income and your filing status. We're going to review some of the other eligibility steps as well. And here's one other thing to keep in mind. It can actually be more if you have dependent qualifying children. We're going to talk about what some of those numbers look like in just a moment. Let's review some more of the eligibility steps. You must have earned income and meet certain adjusted gross income and credit limits for the current, previous, and upcoming tax years. And the IRS tries to make this a little easier to figure out. They include their earned income tax credit tables on their website, where you can actually look up the maximum credit amounts by tax year on the website. Some other eligibility steps: you must be a U.S. citizen or resident alien for the entire tax year in which you are claiming the credit, and you need to have a valid Social Security number issued by the time you file your tax return. You also can't be claimed as a dependent or qualifying child on somebody else's tax return. And like we said, it's looking at your adjusted gross income. So it's going to look at your wages from salary, tips, self-employment gross income. And again, the IRS makes it easy to estimate that. They have what's called an EITC assistant on the IRS website that helps you estimate your tax credit amount. It's going to walk you through the number of people in your house, how much money you're earning from salary or wages or tips or self-employment income. You're going to enter the information, and it's going to give you not only further questions to clarify your answers, but indication of what you might need to do to qualify. It'll say, does the tax filer have a valid Social Security number? Yes, no. And it'll prompt you to continue through the assistant. It also is going to ask about your tax filing status, and there are some statuses that don't qualify. Here's what qualifies. If you're filing your taxes as a single person, as married filing jointly, you also can qualify. But you're not going to qualify if you are filing as married filing separately. So keep that in mind as well. Now, there are different amounts based on how you're filing your taxes. So the income threshold for your family might look a little different if you're married filing jointly as opposed to, say, head of household. So those who are working and earn less than the amounts we have posted on the screen when you're filing as married filing jointly will be eligible for the Earned Income's tax credit. Again, assuming you meet those other eligibility criteria as well. So for a family married filing jointly with no children, your income threshold for the year for AGI is going to look like $21,710. If you have two children, that amount goes up to $53,330. Now, on the next screen here, we show what those threshold amounts would look like for someone filing as head of household and single. Again, 0 children. This is a little bit lower threshold than what we saw for married filing jointly. It's closer to $15,820. Again, filing with 2 children, for example, takes that up to the threshold of $47,440. Now, there is a new rule for 2020. It's going to help people that were impacted by either job loss or changed income in 2020. It allows taxpayers to use their 2019 earned income to figure their earned income tax credit if your 2019 earned income was more than what you got in 2020. So that should help people get a little bit better maximum credit amount. And here's what those credit amounts look like. If you have no qualifying children, the maximum earned income tax credit amount looks like $538. But look at what the number is if you have 2 qualifying children. It takes it all the way up to $5,920. Prior years, you can still get your earned income tax credit for past years if you didn't take advantage of filing for those before. And there are some deadlines. You can file for as far back as 2017. If you can get your earned income tax credit paperwork turned in by April 15th, 2021. If you haven't filed for 2018 yet, you still have until April 15th of 2022 to get that paperwork turned in. You would need to file a 1040 for that tax year. So if you want to claim that 2017 earned income tax credit, you're going to need to file your 1040 for 2017. If you have qualifying children, you're going to also need to make sure that you're filing that Schedule EIC form for that tax year as well. So again, here's how you file for this earned income tax credit. Again, you're going to have to file a tax return, a federal tax return, and you can use the IRS free file site or fillable forms to make it easier. And we link to that in the description below. You can also file in person, and there are assistance sites or free tax help available. Now, keep in mind, because of COVID restrictions, this might look a little different. So we give you some websites of how to contact an assister near you. You can use that Site locator tool that's on the IRS website. Paper forms. Again, it's the 1040 and the EIC form, the Schedule EIC form. If you have children, that is the linchpin that makes this all work. For a lot of families, you're going to want to take advantage of this because it could be a couple thousand extra dollars that either comes in the form of reducing the amount you owe or a refund. There are some additional sources we link to in the description below. We give you that EITC assistant we referenced earlier, the EITC tables where you can look up the maximum credit amounts by tax year, and that original tax tip where this all started, coming from the IRS, reminding families to take advantage of this extra money they could have coming their way.